every time Donald Trump has been in office, it has done well for the marketplace. There are some things that I do like about the policies that he's going to put in place, such as focusing on manufacturing in the United States. A lot of the things that we have that are around our home are made in China, Indonesia, Taiwan. They're outsourced, which is fine. However, when we're pushing these things outward, it can affect us, especially when we're about to have all these tariffs put in place and everything like that. So focusing on American manufacturing, I think, is going to be beneficial to the U.S. Another area that I think is also going to continue to perform well, like there was $1.28 trillion that were put into this market today, right? After he was announced as being elected, all of this money we started to see go into the marketplace. We saw that if you looked at the heat index, which will just show you like a map of how stocks are performing, it was so green. It almost looked like Christmas. Okay. Then on top of that, we saw where crypto and Bitcoin shot up as well. I think Bitcoin went up to like 75,000, right? So we know that he is bullish on cryptocurrency. We know that the banks are starting to buy into cryptocurrency. So seeing how weak our current dollar is starting to perform, we know that our current financial system is not necessarily sustainable long term. So being able to entertain other ways of operating financially, looking at cryptocurrency as one of those, I think is a strong move. Now let me tell you, okay, I do have my cons. I just let me say that, but that's not the focus. The focus is, how do I feel that our economy will be impacted by him being president? I think as far as he did a horrible job from 2017 to 2021 putting jobs in America. We do know that the data suggests that he actually was the lowest performing president to put jobs in America. My hope is that in this elected term, that with him focusing on American manufacturing, that a lot of these trade jobs, right, the skill sets that require you to have a trade, my hope is that they increase. The drawback to that would be he's also very bullish in the tech sector. So we're looking at AI, we're looking at robotics, and the drawback to that is a lot of these jobs are going to start being replaced. So if you watch the reel that I shared earlier, Dr. Butler, he's called the MD Investor, he was talking about that briefly, where the everyday kind of labor force jobs are going to be getting replaced. And we can already see that happening now. If you go through the drive-through, they're starting to move them into AI to take the orders. Then it's eventually going to be the robots making the sandwiches and bagging the sandwiches. And then eventually it's going to get to a point to where you will only need a human to oversee the machines. So one of the things that they're doing now is they're teaching our kids coding. So I have a 17-year-old, I have an 11-year-old, and I have a 9-year-old. And in school, they're learning coding because it was a point to where the machines were created and AI was created to aid us. And now we're moving into a space where we are there to support the machine. So while I do hope that focusing on American manufacturing will increase jobs, my concern is that because of the push of the tech industry and because of the push of AI, which I know that he fully supports, my concern is it's what jobs then become available. And maybe it's we don't know what we don't know type of thing, because there was a point in time where the internet didn't exist. And we thought that the internet was going to take so many jobs away, but it actually ended up creating brand new opportunities, right? So maybe there is this potential to where, yes, AI is going to take jobs. It's already doing that. People don't want to return to work. Okay, we'll get us some virtual assistants. Okay, we've got AI to be able to do these things that we, would have hoped other people would do. And now we can save on the bottom line and focus on our expansion other ways instead of putting that into the pockets of employees, right? Okay, cool. But there has to be another opportunity that's going to find its way when AI starts to push itself. There were new opportunities that came when the internet was introduced, and we thought a lot of people were going to lose their jobs, but it expanded jobs, right? So maybe with AI, there are opportunities that we don't currently see, and we see it as all these jobs that are also about to be lost as an opportunity for new jobs to arise, new ways to make money to arise, correct? Okay, cool. When we're looking at the marketplace, all right, QQQ went up over 2% today. The S&P 500 went up over, I believe, 3% today. The marketplace in general has peaked. And that is normal post-election. But given the fact that we know when Donald Trump sends out a tweet, when he says something, the market will be volatile, he is honestly kind of good for investors. We know that renewable energy stocks, they took a hit today because Donald Trump is focused on crude oil, right? And so oil stocks are going to see a rise. Renewable energy stocks already started to see a dip. Obviously, as an investor in oil, I am happy about that. As a consumer, you will start to see what? You should see a decrease in prices at the pump. I see a lot of people mentioning how they feel like the cost of groceries are going to start to go down, how the Fed rates should start to go down, right? And these are the things that we're hopeful for. The issue with that is, let me tell you why we're hopeful that the Fed rates go down. When the Fed rates go down, it empowers businesses to be able to borrow more. When businesses can borrow more, that allows them to expand. When they can expand, that allows them to hire. When more money is generated in our economy, that means that the consumers are now purchasing more, which our economy basically runs off of a consumer industry. Like, our GDP is going to be impacted in a positive way by that. The issue that I have, though, is when these tariffs and stuff come into place, and you guys can let me know, like, it's a little difficult when you're talking to yourself, okay? But when the tariffs come into place, it's going to make other things more expensive. One of the issues that farmers had a huge issue with, and this was around the time of the pandemic, was when prices started to go up, the cost to feed the animals made it more expensive for them to sell them to the stores. When the stores would purchase the meat from the farmers, they then had to raise their price, obviously, to turn profit. Now, who does it impact? It impacts us. So it's almost like a toss coin. Will groceries go down? Maybe. Gases, I can see. Let me see. I'm sorry to overload. What do you think about REIT with interest rates? Okay, I'm going to go into questions in just a minute. I did set myself a little timer here so that I don't talk too much, because I tend to do that when I get excited about a topic. All right. Let's talk about potential future policies and market impact. So I have some notes here. You will see. Oh, yes. In the banking industry. So Charles Schwab, they saw an increase in their shares from this election. The banking industry, that sector, is going to start seeing a rise in their performance in the marketplace as well. And I do have an ETF for you guys to look to invest into within the financial sector. Okay. So we have the Financial Select Sector SPDR Fund XLF, and that's focused on the financial institutions. And then you have Investco KBW Bank ETF, which is geared towards U.S. banks. Now, during the time of the pandemic, bank shares plummeted. I mean, they were just deplorable. After election, we start to see a rise in those shares as well. Let's see. As far as energy is concerned, okay, you have your energy select sector. That's going to be your ETF of XLE. And then your iShares US Infrastructure ETF IFRA. So this is important because when people start talking about wanting to invest into the marketplace, we get a little scared when we start talking about individually investing into stocks. But when you're looking at ETFs, index funds, mutual funds, that allows you to be able to invest with a lower barrier of entry as far as risk is concerned. When you're individually invested into stocks, you're taking on a much higher level of risk. And if you're a new investor, that can be very scary. We are already risk adverse as it is. We don't really like to trust anybody, especially with, the hype of investing on social media. A lot of people have been burnt by believing certain things from different people on this internet. The best thing you can do if you are risk adverse, which means you know what you don't know, and you're not trying to get caught up in any mess trying to invest, I would go with index funds, ETFs, mutual funds. Okay. It's important to diversify, like Wise Money Academy said. And I did an interview with him on my podcast too. It's actually very, very good. He went from being in prison to building a pension. I think that was what it was called. All right, y'all. I'm wrapping up here. I hope that. The heck? What did I do? I don't know what I did. I'm wrapping up here. Y'all have a good night. I hope that for all of you who registered for the webinar, I see you there. We've had a lot of people register from the reel. If you didn't get sent the link, there's a reel that I posted within my feed. Just go there, comment webinar. It'll send you the link. You'll also be put into a free community for women that focuses on wealth building practices. So your budget, healthy money management habits, what other pillars are in there? Oh, you have a spending tracker. So there's freebies that I put in there. I'm not sure if the code is activated for this live, but if you don't get it, just comment under the last reel that I posted and it will send it to you. Okay. All right, y'all. I'll talk to y'all tomorrow. Y'all have a wonderful night. I have to go do my doctoral homework. Bye.